desk at SBI Cap Securities. Sunny, just before we went into break, we were speaking about how NCC has made a full recovery despite the NHAI's bar from participating in any more tenders with regard to road projects. Talk to us about the kind of, if you have a view with regard to an NCC, what's the take? No impact at all on the stock as a result of this?
Right. Yeah, good afternoon.
Very good afternoon.
I'm audible. Yeah.
Yes, very
Yeah,
much.
good afternoon. So actually, what has happened, the entire EPC pack, we have seen that because of a very poor execution during the last 3 to 4 quarters, and at the same time, we have seen some execution challenges pertaining to Jal Jeevan Mission as a project. So receivable is something which has increased for a few of the large EPC or construction player, and that is the reason we have seen that most of the EPC player, including NCC, has withdrawn their growth guidance for FY26. So earlier NCC was expected to deliver a kind of 10% growth in fiscal year 26, and during the Q3 results, we have seen that has been withdrawn. And on the top of that, we have seen this new challenge in terms of a debarment for participation in the road project. Although I'm sure that NCC will contest this ruling, and definitely some solution will come out of it. But as we speak, looks like FY26 is likely to be muted overall for an NCC in terms of earning growth. No doubt the company is sitting on a very robust order book. The only issue is execution and receivables from for the government project. Trading at a very reasonable valuation, and at the same time, we have seen a promoter buying from an open market, which gives some confidence that there is some value at a current market cap in the business. But once there is a significant improvement in execution, maybe at that point of time, the shareholders will be rewarded. So maybe wait and watch. If somebody want to deploy money from a long-term perspective, gradual accumulation is the right strategy for a stock like NCC.
49 right now in the stock, but I do want to talk about some of the other movers as well in trade. While ONGC, of course, is holding out well. But back with Sunny Agrawal. Sunny, just looking at individual stocks like Reliance, check in on that because it's again threatening to breach 1400.
Yeah, so coming to Reliance, yes, seems to be a stock under pressure, maybe because of a muted market sentiment. But overall, what we feel is that if you look at the current market price, maybe it's a good time to accumulate the stock, as we believe the going forward as the non-oil and gas consumer-facing businesses that are likely to do well. And at the same time, the much expected tariff hike as far as telecom business is concerned, we believe that should come in the month of June. So that should augur well, and that should add a kicker to the earnings growth as far as telecom business for Reliance is concerned. Oil and gas, within oil and gas, upstream business is likely to remain under pressure, but maybe due to this temporary spike in crude or for that matter gas prices because of ongoing tension between US and Iran can add some kicker for some point of time. But overall, I think the growth driver continue to remain the non-oil and gas consumer facing businesses. We believe the fair value of the Reliance from a next 12 to 18 month perspective is 1700 to 1800 rupees. So maybe any dip at a current juncture is a good buying opportunity in the Reliance industry.
I wonder, what should one start? Okay, before I come back to you, let's go across. We have, in fact, Jeet Adani speaking at the AI Impact Summit. Let's.
Trades right here on ET now, just counting down to the market close, and it is definitely turned out to be a rough day given that we've breached some significant marks and levels in trade. I mean, look at where we are, already breached that 25,400 level as well in trade. And key heavyweight stocks are the ones which are pressuring the markets today. Sunny, how do you now go back to the drawing board, and what kind of levels do you see for the Nifty, given that once again we've fallen below 25,400?
Yeah, I think maybe technical levels are not my expertise, but maybe I feel that 25,000 is should emerge as a strong support in case market is to correct further because of this ongoing geopolitical tension. I think that level should be should hold on, and that was the level which we have seen prior to the announcement of India-US trade deal also. So maybe 25,000, if it is able to defend that level, maybe we continue to remain in a positive territory as far as benchmark indices are concerned.
Understood, absolutely. While, of course, today ONGC has managed to hold ground, as is the HDFC Live. But look at the rest of the market. Even IT, which began the day very well, has completely succumbed to